What's going on, everybody? My name is Blake Chansey. I'm a realtor in the Greater Vancouver area, and my goal here is to help provide some value through these videos like this, where I'll be discussing real estate market news and trends. And in British Columbia and Canada as a whole, this past week, we have seen a couple massive headlines regarding the real estate industry and the economy. Point number one, Bank of Canada, most of you have heard, has reduced the overnight lending rate by 25 basis points, which means it's a 0.25% rate reduction for your mortgage, your HELOC, or your line of credit. And number two, Mark Carney has announced a $13 billion agency created called Build Canada Homes. This is very interesting. I didn't hear any lead up about this, so I'm trying to catch up to it. So let's go back. Let's start with interest rates here. Now, if we went back a few months ago, there was a very slim chance of seeing any changes to interest rates, let alone a reduction. So I think this was a nice surprise for current variable rate holders, anybody with a mortgage or anybody with a HELOC or a line of credit. All this reduction really means is that you're going to be seeing savings for about $13 to $15 per $100,000 that you've borrowed on your mortgage, line of credit, or your HELOC. So if you borrowed $1 million from the bank, it's going to be saving you about $130 to $150 a month. So it's not a huge amount, but at least it's something. Could boost a little bit of more confidence in people looking to purchase sometime soon, but who knows? Now, I mean, the really interesting part about this is it doesn't really move the needle in terms of affordability for those looking to make a purchase, because fixed rates have already been hovering around 3.99% for the last couple of months. So realistically, we are just looking at variable rates now becoming more close in terms of attractiveness as fixed rates have been for the last little while. Now, variable rates getting more attractive in comparison to the fixed rates isn't going to change the market. Right now, we are seeing massive supply and not enough demand. But one of the funniest things that I've heard recently is a quote from RBC said that they were worried about this 0.25% decrease in interest rates, that it was going to help explode Canada's housing prices again. And there's absolutely no sign of that. There's way too much inventory and just not enough demand right now all across the board, wherever you're looking in Vancouver, Toronto, specifically in Tsawwassen, where I did the majority of my business. There are 200 detached homes for sale right now and only 9 sales in the last 30 days. So that is over 20 months of inventory on the market in Tsawwassen right now. These numbers are always changing though as well. So, I mean, like, I could look again in 2 days and these numbers could be skewed a little bit more in favor to show a few more sales over the past 30 days. So it's you got to take everything with a grain of salt. Over the next 18 months, though, there's going to be more than 60% of Canadian mortgages coming up for renewal. And a lot of these people actually have a very low fixed payment. And if you were in a variable, you are in a fixed variable where your payments will stay exactly the same, but the length of amortization for your mortgage would go from like 25 years, some over 99 years. Absolutely wild. I am hoping that we do see another 2 rate cuts over the next 6 months before spring. Bank of Montreal has been saying this for the last couple of weeks. They are very hopeful of a couple more cuts. And I think that'll help a little bit with buyers' confidence moving forward, some market sentiment. And as we know, real estate is a bit of a herd mentality where, when everybody thinks it's a good time to buy, it's usually too late. But I think some positivity in the real estate market right now would be a definite good thing. All right, well, let's move on to Prime Minister Mark Carney's announcements for a new project called Build Canada Homes. Definitely big news in Canadian housing. It's pretty wild. We're talking about a $13 billion project. It's an agency in Canada like CMHC that's supposed to kickstart affordable housing at scale. This will be a new federal agency with a bold promise to build faster, smarter, and more sustainably. Now, if you care about housing affordability, the real estate markets, or construction and trades, stick around. You might want to listen into this one, as it's something that I don't think anybody predicted it coming, but it's here and it's in a big way. The claim to build affordable, cost-effective homes with predictable costs is pretty wild. They're saying that they're going to be spent $13 billion to build 4,000 homes initially. That means it's going to cost $3.25 million to make one single prefabricated home that's built in a warehouse and then shipped out to a federally owned site. That's absurd. I think that's going to bring a lot of skepticism into the market from the public, considering this is taxpayers' money going towards social housing. It's not market housing. It's not a property you can purchase for yourself. This isn't offered to you, the consumer, at a lower cost where you can afford it in today's market as a first-time home buyer or somebody, in the younger generation that's just trying to get into the market. So Build Canada Homes is something practical that's going to be good long-term for Canadians. I really don't know. I think that the only people that are going to benefit from this are the owners of the businesses that are going to be hired by the government to build these prefab homes. It almost reminds me of the Arrive Can app. I don't remember how much money it cost to build that app, but then some dude with a bottle of Coca-Cola and a couple pizzas built the same app or better with better security overnight in his dorm room. So, I'm always skeptical of new government programs, and we'll see how this pans out. There's also record high numbers of rental market housing construction happening right now. So I don't really think this is the best time to announce more. It's something I really don't know how it's going to pan out in the future. So very interesting that we're seeing this big of an investment going to this at this time. If Carney and the federal government can execute, this could be one of the most significant housing infrastructure changes in decades in Canada. But on the flip side, it could be a complete flop. Like with targets over 40,000 homes in the next 10 years, I think those numbers are highly inflated and very likely won't even come close to targets like other promises that we hear from the government. I'll be keeping my eye on this. The first builds, the real cost, and whether or not this shifts any balance between renting and owning, and what the general feedback from the public, other realtors, mortgage brokers think. So I'll probably do another update on this in a month or so. Let me know. What do you think? Is this good, bad, or do you even care? Are bigger reforms needed? Anyways, I really appreciate you guys taking the time to watch this video. I hope I can bring more value in the future. If you liked it, drop a comment, drop a question, like, subscribe. Appreciate you. We'll see you soon.